What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Friday, and it's a Friday on a 3-day weekend. So these feel particularly good, and we also feel particularly good about all the veterans out there on this Memorial Day weekend, past and present. We thank all of you for your service, and we appreciate everything that you've done for us. Now, we've got a lot to talk about because it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. This week, we, of course, had Nvidia news. We had the 10-for-1 stock split, which we have to talk about. We had dividend increases over there, but we've got a lot of headlines that you really need to read into, and I will do my best to help you read between the lines on this week's news. And so we kick things off like we always do with Meta Platforms. Started the week at 469, up about 1.9%. Finished the week at 478. Mark Zuckerberg, who we've criticized here numerous times here on the channel, he's unveiling a new group focusing on AI. Now, this is not an internal group of employees over at Meta. He's actually reaching out to other executives, including Shopify's chief executive officer. You also have a Stripe chief executive officer. That's a payment processing site. You also have executives at GitHub and former Microsoft executives as well. Mark, to give him a lot of credit, is starting to really reach out, really not necessarily rely on himself or maybe even internally over at Meta. He's reaching out. This is a huge sign of intelligence, huge sign of maturity, like what Mark is doing, and I'm certainly rooting for him, honestly. Now, Meta is discussing deals with publishers to train AI. This is great if you are a content creator. In the shorter term, news publications, the New York Times, Wall Street Journal, those types of outlets, they're going to get these deals, and they're going to allow Meta and others to access their content to train their models. In the future, the crowd is going to be an even better source for this. And at some point, instead of just relying on maybe like a Substack subscription to pay for your content, or you're like here on YouTube, or you have a blog and you have AdSense or Google Ads to help support pay for your content that you're putting out. In the future, you're going to be able to license this content to these AI companies, and that'll certainly keep good content continuing to be made. Now, here's the biggest headline, I think, of the week outside of Nvidia's earnings is Alphabet and Meta are eyeing multi-million-dollar AI partnerships with Hollywood studios. Now, the between the lines of this headline is you have Hollywood out there. They have essentially a monopoly on producing movie and studio quality TV shows and movies. They also have probably even a bigger stranglehold on the distribution of those movies through their own streaming platforms, obviously through the movie theaters as well. I mean, it is a well-oiled machine. I'm out here in California. I know all about this. I have people that actually work in this industry. The Hollywood studios have a lot of power over content creation, particularly on the movie side and big productions. That is all going to change. Alphabet and Meta are going to steal this business right underneath Hollywood's nose. They're going to pay them $200 million. They're going to get access to all these movies. Google and Meta and probably other companies as well are going to be able to create large language models or AI systems that are going to allow you to create feature films and movies and entertainment without the need for a studio or without the need for Hollywood. And these companies are going to do it with the content that Hollywood already has. I posted on our other channel, The Bleeding Edge, essentially a video, just a 4 or 5 minute video. I'll have a link to it down below describing what is going to happen. And I think it's brilliant by Alphabet and Meta because the one thing that they lack is the access to the content. They have distribution platforms in YouTube and certainly Instagram and Facebook that are as big, or in a lot of cases, bigger than Hollywood. What they need is the content, and they are going to have AI create that content. At some point, you're going to be able to put yourself into movies. You're going to create TV shows about you or to create TV shows using AI that you want to watch, and you are not going to need Hollywood to make any of that for you. Moving on to Apple, start of the week at 190, basically flat, as shares of Apple finished the week at 190. Now, Apple is cutting prices of the iPhone in China amid rising competition from Huawei and others. Maybe this is how we get inflation to come down, is increased competition and force these companies to lower their prices. Apple's foldable MacBooks, these could ship as early as late 2025. and maybe potentially in the first half of 2026. It all hinges, if you will, on that hinge. So you've got a foldable phone, it creates this crease or this hinge, and that needs to be as durable and maybe not as visible as possible. We'll see if Apple goes this route. We've seen these rumors before, but obviously it has to come in the form of a product at some point. Moving on to Amazon, start of the week at 186. You're going to want to see this technically later in the show, as Amazon down about 2.8% to finish the week at 180.75. United Natural Foods, which is a food distributor, they extended a distribution partnership with Whole Foods through 2032. Obviously, this is a headline that pretty much no one cared about, but if United Foods decided to not work with Whole Foods, which probably is not in their best interest, well, it would put Whole Foods in a bind. Good thing for Amazon is they're going to keep working together. Moving on to Netflix, start of the week at 621. This stock is so resilient, up over 4% to finish the week at 646.75. Now, Peacock, which is owned by Comcast, Netflix, and Apple, they're going to have a streaming bundle where you're going to get all three streaming services for just $15 per month. That's a 30% discount over and above if you were to go to each of these individually. Stream Saver is going to be brought to you by Comcast, and it seems like it's a pretty darn good deal. If you're already subscribed to maybe two or even all three of these, it's something that you're probably going to want to check out because you might be able to save a couple of dollars per month. My guess is on this one is Peacock, which is Comcast, is obviously paying a wholesale rate to Netflix and Apple. That's pretty standard in the industry. But my guess is Peacock is not making a lot of money on the $15 per month, but they'll make it back on the fact that they'll keep the subscriber count over at Peacock at a pretty high level. And so when they have ad-supported content over there, they'll be able to get higher ad rates because of the subscriber numbers. Now, Alphabet, Meta eyeing multi-million-dollar AI partnerships with Hollywood. I talked about this during the Meta segment, so I won't get into it any more detail other than Netflix stands to benefit here as well, as they have one of the great distribution platforms in the world when it comes to streaming media. As you have more AI streaming media being created, well, Netflix certainly can benefit from that. Now, speaking of benefiting, Nvidia is enabling all of this as shares start the week at 946. Boom, up to over 12.5% to finish the week over 1,000, not 100, $1,064. We've got well north of a $2.5 trillion valuation. This obviously all comes after the company reported their Q1 earnings. The revenue was spectacular. You know that by now. The Q2 outlook was absolutely fantastic. They say revenue is going to be $28 billion. It's probably going to be $30 billion. But some supply chain issues could come into focus as Samsung's new high bandwidth memory, or HBM chips, they failed to meet NVIDIA's tests due to heat and power issues. So this isn't good, particularly for Samsung. Now, it's great for SK Hynix and maybe other memory makers as well, as HBM3 was essentially a fourth generation high bandwidth memory that Samsung was working on. And they were kind of touting this. Honestly, I was reading articles about this. Samsung's been working on this for a little while, and they thought that, hey, this was going to be able to they were going to be able to be a main supplier to NVIDIA. Well, it doesn't look like that's going to happen, at least in the shorter term. They're going to have to go back to the drawing board. For NVIDIA, this is probably slightly disappointing because it simply means that they're going to have to continue to use their existing suppliers and maybe be somewhat supply chain constrained as it relates to their chips. Now, NVIDIA, just like Apple, is cutting AI chip prices in China amid competition from domestic providers there. Now, NVIDIA's market cap is now as big as Amazon and Tesla. That's insane. Now, I don't think this necessarily means NVIDIA is this wildly overvalued company. Certainly their growth rate, their profit, their cash flows, everything points to a company that should have a premium multiple, which it does, but it's not wildly egregious. And certainly the forward guidance on NVIDIA, at least looking out 2, 3, 4 quarters, none of that comes into question. I think what this means is there's huge opportunity for Amazon. As the company has really turned the corner from a profitability standpoint, that market cap certainly can balloon and expand. And certainly Tesla, while it has its issues, can probably achieve that as well. Moving on to Google, started the week at 178, down about 1.67%. Finished the week at 175. The United States is probing the company's Waymo self-driving vehicles as there appears to be maybe more self-driving vehicle incidents. Now, I'm one of these people. I think we're a long ways away, and long is subjective, but I don't think we're going to have robo-taxis or these self-driving cars on a mass scale. Yeah, maybe in San Francisco, maybe in Arizona, maybe in the Hyperloop in Las Vegas, and maybe that's enough to create a big business. But I don't think we're going to be anywhere in the USA and be able to get a robo-taxi to show up. I think we're still a long ways away from that, and these driving accidents will only get magnified when and if Tesla launches their version, because the media will love to tack Elon Musk on any kind of accident with Google. More or less flies under the radar. Now, not flying under the radar is the fact that the company is recommending using glue. Yeah, glue to help your cheese stick to your pizza. Google's search results are recommending all kinds of crazy things. People on Reddit and other social media outlets have found numerous mistakes inside of their search results. Now, in one way, this is not a great look for Google. In the other way, they are shipping products super fast. And so that deserves some criticism, that they're shipping products that aren't that good. It also opens the door for companies like Apple, who've been a little bit more methodical on their AI product rollout. It probably helps other companies as well, other startups that could take the lead from Google if they don't get their act together. But Google is moving at the speed of light. So is Microsoft. So is Meta. They're making a lot of mistakes, but in some ways it's admirable, because that's actually what a startup does. That's what these companies used to do when they were much younger and had far less market caps and less attention on them. So in some ways, it's actually refreshing. Now, Alphabet is going to buy a $350 million stake in Walmart's India's Flipkart. Now, keep in mind, Flipkart is worth basically $37 billion in the great country of India. So a $350 million stake is not a whole lot. Now, Google plans to bring ads in its search AI overviews. Well, this is obvious, but I think their biggest opportunity, I've seen a lot of demonstration. I've even had people from Google call me like every single day to try to get me to run more ads. I've seen demonstrations. I've beta tested some of the shopping ads. They're great. I think AI is going to bring a lot of revenue from the shopping ad side. There's going to be a lot of engagement, a lot better advertising there. But they obviously still, from a contextual and like a factual standpoint, Google's got a lot to work to do with their AI. Moving on to Microsoft, start of the week at $425 per share, up 1.2%, finish the week at $430 per share. Microsoft's Copilot Plus PCs might spark a PC upgrade cycle. This after Microsoft revealed AI-ready PCs with new Surface models. They also launched this recall software feature, which again, on our other channel, shameless plug, we talked about, as the AI PC feature is going to take screenshots and remember everything that you do on your PC. I think more interesting is these chips are being developed by Qualcomm, so they're getting into the PC game in a much major way, but also the regular players, AMD and Intel, are going to be there as well. This should also benefit other companies in the PC business, including Acer, Asus, Dell, HP, Lenovo, Samsung, and many others. And I tell you what, I was on the PC blogs, and I follow a few of them that are not these simps that just regurgitate what these companies say. And I tell you what, these features on these AI PCs, the performance alone is certainly worth an upgrade. I have benefited from some of these performance upgrades as the MacBooks have been on these M1 chips, and they are fantastic. These new Microsoft PCs bring a lot of those features to PCs, and I think it's going to be a pretty big deal. Moving on to Tesla, start of the week at $174.55. Up nicely, up 2.7% to finish the week, close to $180 per share. Now, not good that Tesla is cutting production of its Model Y in China during the second quarter. This is likely due to a lack of demand. The company is not slowing down in China as they are expanding or breaking ground on a $200 million Shanghai mega factory. The mega factory is a Megapack energy storage batteries. Those batteries, while it's not maybe an explosively growing business, I think you have long-term sustainability in that business continuing to grow, and it's a great product. Elon Musk is not in favor of the U.S. tariffs. As you recall, President Joe Biden unveiled a 100% tariff on China-made EVs. So I tell you what, if President Trump gets reelected and he starts levying all these tariffs, we'll have to remind ourselves that President Biden was pretty aggressive there as well, and Elon Musk is not in favor. I think that's more or less lip service, since he has a lot riding on the country of China, and consumers right now have a lower intent to buy an electric vehicle than any time in the last 3 years. And I think this makes a lot of sense. Anybody that's wanted an EV, you've bought one. You've had plenty of opportunity. The cost has come down certainly on the new vehicle side, but especially on the used vehicle side. You can get a used EV for basically nothing. And if you've wanted a Tesla, you've gotten one. And if you're on the fence or you don't want one, well, it's going to be tough to get people to switch. Now, moving over to technical segment of the show, S&P 500 looking absolutely so good. We are making higher highs, higher lows. And we confirmed a new higher high this week. So when you confirm a new higher high on the dip, and look, I wish I could tell you where the dip is going to be, how deep it's going to be. If I could do that, I probably wouldn't be doing YouTube videos. I'd be on a beach somewhere, permanently retired. You have to buy the dip. This is an uptrend. You buy the dip in an uptrend, and pretty much most of these stocks are in the same boat. Now, Meta having trouble getting above the area where we're at right here, about 478. We've tested that area numerous times, really over the last, we'll call it 30 days or so, not able to get above that. You get above that, it's actually probably kind of a breakout, at least shorter term buy, because you break out above this. I think you could argue that you could retest the areas up here at 530. That would be a good $40, $50 move. Get rejected here. Areas down here, probably the first area is 460, even lower 450. Those are the areas I'd be targeting. Apple is sideways, consolidating between 166 and 196. We're in a $30 trading range with Apple, and we've been here since April of last year. So over a year, we've been in a $30 trading range with Apple, and until you get a significant break above, you are not expecting shares to do that. And in fact, you're expecting them to get rejected here. Any rejection on Apple, particularly down closer to 170, probably should be bought. Now, speaking of probably should be bought, here's Amazon in a beautiful uptrend, just like the S&P 500. We just marginally created a higher high here. I guess it depends on who's looking at the graph. If you're bullish Amazon, you probably would say that this is good enough for a higher high. If you take it up to the wick, it certainly is. And so in that case, you've pulled back to the middle of the channel. You pull back to middle of the channel, and that often is a buying opportunity. Speaking of a buying opportunity, Netflix has been in a buy zone, forever now. Stock is so resilient. It just seems like we're at a destiny to retest the all-time highs up here at 705. I'd be more apt to take profits or sell shares of Netflix up at these levels, although any pullbacks in the streaming giant should be bought. Now, speaking of should be bought, we put a big old gap in the chart on Nvidia, created a new higher high, textbook higher high. I mean, we are in a channel that dates back all the way to 2017. Some of you guys weren't even investing yet. This thing is looking absolutely beautiful. You're at this top of the channel. This is where you take some profits if you feel like it. Buy that Rolex watch. Buy that new BMW. Life is short, folks. They're not going to put your Nvidia shares and your 401k account on your tombstone. So enjoy your life while you're on this earth. Ask any of the veterans that paid the ultimate price for this country. They certainly didn't fight for you just so you can keep your account balance in your 401k at the highest level possible. Enjoy your money because it comes and goes, believe me. Any pullbacks in Nvidia, obviously, you know what you're supposed to do. Google on a parabolic uptrend. We were in an uptrend, and then we straight went parabolics. Pullbacks back down to like 160. That's the first area where you're looking for that. Microsoft, we talked about 2 weeks ago on the program. That was your buying opportunity because here you are in this uptrend. We said there was 2 FAANG stocks that you could buy. Microsoft was one of them because you were touching the bottom of the channel. Since then, it has acted about how you'd expect in this technical pattern. You've moved higher, and it looks like you're on the verge of creating a new higher high, maybe as early as next week on that one. And finally, Tesla is in a different shape than all of these stocks, although it's a different business than all of these stocks as well. Apple is a manufacturer, but they're a contract manufacturer. Same thing with Nvidia. Tesla actually makes its own stuff. And so lower highs, lower lows. This could be a dump out bottom, could be a reversal. There's nothing, absolutely nothing that says it is. But if this is a reversal, you would expect this one to move higher. You would take profits up here at about $200 per share on Tesla. Any higher than that, you're certainly doing the same, but it certainly could mean that this downtrend is over. That has to be confirmed, and it has not yet for Tesla. Folks, that was the FAANG Stock Recap Show for Friday, May 24th. Again, happy Memorial Day. Thank you all to the veterans out there, past and present. are grateful that we have you to protect our country and around the world. Thank you so much. Have a fun and safe weekend. We'll see you again next week. Good luck with your investments.